Before we shift gears and dive into advanced price movement analysis, we need to establish our operating environment. These are not preferences, they are the framework of the method. 1. Always use log scale, and here is the real reason. This is how the market values itself. Price doesn't move in dollars, it moves in percentages. A move from $1 to $2 equals 100%. A move from $101 to $102 equals 1%. Same dollar move, completely different market meaning. When people say, Tesla went up, no one says, it went up $130. They say, it went up X%. Because the market is chaotic, but the fundamental structure inside it is relative. Log scale expresses that reality. A 10% move always appears as a 10% move, regardless of the absolute price. Only with log scale can you accurately see fractals, wave structure, proportionality, speed, Fibonacci relationships, natural scaling, linear distorts, log reveals. 2. Magnet tool always set to weak. We mark reference points that must remain precise across multiple time frames. One wrong pixel on a high time frame can break an entire structural interpretation. Weak magnet equals accurate manual precision. 3. Dark background, bright candles. Your eyes are the instrument. We analyze structures, patterns, momentum, shifts in rhythm. A dark background represents the space the price moves within. It removes noise, reduces strain, and highlights the only thing that matters: price behavior. 4. Always start from the beginning of the chart. To understand any system, you must see its initial conditions. Every move originates from a prior move. If the chart becomes noisy at a low time frame, zoom out to a higher one to restore structural clarity. Older assets require starting at higher time frames to see the macro architecture. 5. Some charts don't start at the true beginning. Sometimes data is broken or incomplete, making it impossible to identify the original conditions. In that case, it's always better to find a proper index of the asset, because an index usually contains the full historical story. 6. Even an index must be natural, not artificial. Example: before 1973, the US dollar's price data is artificial. It didn't trade freely, so the price movement isn't chaotic or natural. Any asset with synthetic or formula-generated history cannot be used to determine true structural behavior. Summary: these rules are not cosmetic. They're the difference between shallow charting and actual system understanding. Log scale to reflect real market behavior, percentage-based growth. Weak magnet for surgical precision. Dark background to isolate movement. Start at the beginning to understand the foundation. Use natural, complete indexes for true structure. This is the starting point for serious price movement analysis.